Welcome to Markets Now. I'm Michelle Rook with Don Roose U.S. Commodities. Friday's closes, well, we were mostly lower in grain and livestock futures trade with the exception of the cattle market. Don, let's start off talking about the grains. In sum total, where did the pressure come from Friday? Was this profit-taking harvest pressure, or were we maybe even taking out weather premium?
Well, I think, yeah, and I think it was just as much as anything respect for the time of year that we're at. This is probably one of our big harvesting weekends, if you will, on corn and soybeans. And it looks like we're going to have an open harvest here in the U.S. for the next 10 days. So, we're going to get close to that 50% harvested level pretty fast. Then I think it depends on what the farmer's going to do with it. And, then at the same time to end the week, the technicals closed poor, so we didn't like that. But the weather pattern change in South America, we're going to see if that does actually come to fruition the end of next week. Looks like we're going to get into maybe that little more normal seasonal rainy pattern in the dry areas of Brazil, Michelle. So I think taking risk premium out of the market, funds covered a lot of their short positions, so more balanced at these levels.
Yeah, so if those rains materialize or start materializing in South America, how much downside risk is there, especially in that bean market, Don?
Well, and that's a good point, because I think where we're at really is the producer probably is going to pick up, his selling as we get into harvest here a little bit more. Just more expensive to carry the beans, so see those move. But to answer your question squarely, $10 was a big area we had a hard time getting over on November soybeans. So you'd have to say this 10 to 10 is probably the support zone. Same thing on corn, probably a follower here, if you will. The corn market fundamentals are better. Possibly in the long run on versus the soybeans, but that $4, $4.05 area is big support. Remember, it was hard to get over $4, so that's a support. And then, of course, you have big carries in the market out in the deferreds.
Yeah. And of course, you point out that we were overbought, probably due for a correction in the market. We did have higher weekly closes in corn and wheat, but not in soybeans. And we've had higher closes there for the last 6 weeks. So is it possible the party is just over in the soybeans?
Well, I think it probably short term is. Seasonally, we usually bottom, the beginning of September, and then we break into the first week of October. So it might be a contra-seasonal where we rally into the beginning of October and then we break down here just because of pickup in movement, some of the change in fundamentals in South America. And, it's a La Nina year also, Michelle. So you got to be pretty alert if we're going to have maybe a pattern change in the north where we get wetter, but we go drier in southern Brazil and Argentina. We're about 5% planted in soybeans in Brazil, about 14% of the corn in Argentina. But following that weather pattern through, and if it's a La Nina year, we got a better chance of a dry condition in the gut slot of the corn belt. So, weather accounts for a lot of these markets. So I think the weather watch is definitely going to be on in South America starting soon.
Yeah. We're also watching weather, Black Sea, especially in the wheat market, aren't we? We were putting some premium in, at least towards the front end of the week here in the wheat market, weren't we?
Yeah, the wheat market, much like the corn and the soybeans, we rallied up into very tough resistance on soft red wheat. That 615, 617 was just a tough zone. Of course, we powered through the $6 and got up there, but quickly, the weather pattern might be changing a little bit, at least a little more conducive to planting this hard red winter wheat in Ukraine and Southwest Russia. So took some weather premium out of there again too. And, it might be a market, Michelle, that we're kind of at fair market value, or we get into these big trading ranges until we get a better look at the economy going forward, the weather going forward. And, the end of week versus last week, we had the unemployment rate a little bit better than the trade thought. That put the dollar up strong, interest rates higher again. So, maybe a little bit of that was a factor too. Higher dollar, bottom line is slows down exports.
Yeah, and that's especially true and maybe pressured the wheat market. So we had also put in some geopolitical premium in the wheat market. Do you think we need to have a little more premium, or, as you say, are we fair market value there with that concern as well?
Well, I think that's why we're dancing around here because, of course, it was that geopolitical in the Black Sea that put the wheat market clear up at 13. Now we're sitting down at these lower levels. So certainly if that thing catches on fire over there again, is going to be a big deal. Remember why? Russia is the largest single wheat producer, largest single wheat exporter. So we're going to watch that pretty close. But I think we're just kind of more balanced here right now. You've got that, and you also have so we rally on weather improving, our weather problems, and then we break when the weather improves. So, I think it's kind of maybe more of a lot of these markets seasonally, rather than being real negative, more of a big, broad trading range. Look at the corn charts, big, broad, rounded bottom there, and that's a supportive on the charts long term, Michelle. We'll see if it materializes.
So we can't argue with the fact that some of this rally has come from just plain fund short covering activity. What's your sense of, are the funds still short? Are they flat? Or, are they done buying, at least for the time being?
Yeah, I think that's right. I think, as we hit the seasonal lows, some harvest time frames, that the funds smart lightened up on their position. We think they're down to about 40,000 short in the corn after having those monstrous short positions. We think they're pretty flat on soybeans. We think they're about 10,000 contracts short wheat. So I think they're much like we're talking, they're a little more balanced here. Do you make another move to the upside or downside from the fund buying or selling? But the fundamentals have a lot to do with it, and then of course the funds just kind of chase the fundamentals. So I think we'll watch seeing going forward if some of these moving targets, weather number one, geopolitical number two, and then producer selling or not selling number three, kind of moves this market around in a broad trading range, I'd call it right now.
The other thing that could move the market is the October 11th WASDE. So what's your sense of what we might see for yield changes, especially since we did see a lot of drought move in the latter part of the season in a lot of the Corn Belt?
Yeah, I think when you look at the corn, first of all, it does seem like the big crops get bigger, and that's what we've had going on in the corn market, just kind of consistently larger yields report. The soybeans, I think, are a little bit tougher because we know that August is a time frame where if you don't get the moisture, you can have, and you have hot weather, you can really have some issues. And I think that's partly true. We're going to have to respect that. And also this dry down that we've had here with soybeans, not up to that, what we like, 13%, 13.5 coming in. A lot of soybeans, 8 to 9%. So we're losing some yield there. We're losing some field loss. So I think it's going to be one that's more dicey on the soybeans, but feels like corn yield goes up. Soybean yield, I'd call it a mixed bag.
And the cattle market, we did not make new highs for the move or take out Thursday's highs, but we did end higher with a cash trade up, I think, $1 in the South. So do you anticipate that market is just going to continue to grind higher here?
Well, the cattle market, if you step back from it, what it really does is it's had a nice rally from those big lows, $8, $10, back up into some tough resistance. The October futures moved up, in line with the cash market for the most part. So I think overall the fundamentals are still, positive. It's probably a market that, is reached up to some resistance areas, could get a setback in here. The weights continue to be an issue, Michelle. Accounting for 22,000 head of cattle a week, just bigger than we need from a weight standpoint. But we know that the supply side of the market going forward is just from the placement figures starting now that we're just going to have tighter numbers in the future. It's really more about, are we going to plug some of that with beef imports? Are we going to plug that with some with feeder cattle coming in from both Canada and Mexico? So we can change those numbers a little bit. And then, of course, we have the demand that has to continue to keep up, and that's going to be dependent on the economy.
And the hog market's had a pretty good run. We ended lower today. Are we into chart resistance, or are the seasonals starting to flip over here?
Well, the hog market, much like the cattle market, it's had a big move back to the upside. Well, I'd say a move back to the upside, up into some resistance areas. Some of those summer months getting up into that, close to that 95 level. So it feels like a market that you're back up into tough resistance, like we said, versus similar to the cattle. And seasonally, next week, the cutout starts to come under pressure. Weights continue to build. And by the way, hog weights, much like the cattle, accounting for about an extra 100,000 head of hogs a week. So, I think that's a little bit of an issue. Of course, we've had a lot of liquidation both in the U.S. and in China. So it feels like we're better matched with a supply-demand balance table than we've been here for the last couple of years, Michelle.
All right. Thanks so much, Don Roose, U.S. Commodities. That is Markets Now.